Investment banking is changing very fast. There is no doubt about that. I I even have not 1 cent of doubt that investment banking is changing very fast. In fact, today when I was talking to an investment banker, even though today is Saturday, he was telling me, Rahul, we have reached to a level whereby expecting a bonus from a company is a wrong expectation from the company. If today your job is secured, then that is most important thing. Forget the bonus. And he was telling me that probably in another few years, another 1 to 2 years from now, considering the consolidation which is happening, whereby just like E-Trade bought up by Morgan around $13 billion, Global Capital by Goldman Sachs, and such acquisition will either distort investment banking or it will lead to the collapse of thousands of jobs. So this is one part of the coin which is there in the public. Another part of the coin is that there is one section of investment banking which remains intact even after 20 years. Even after 20 years, when maybe today we have artificial intelligence, maybe at that point of time we would have facial intelligence, I'm guessing. This part of investment banking would continue. Yes, I cannot say that the total volume of the deals remains the same. That I cannot comment, but at least this dinosaur will continue and this animal will continue, and this animal will not be dinosaur. That I'm sure. And this animal is known as merger and acquisitions. Now, what is merger and acquisitions advisory? Merger and acquisition advisory. Every investment bank is having 4 offices. One is the front office, one is the middle office, and one is the back office, and one is the risk office. The risk office is only in the top investment banks, which include Goldman Sachs, JP Morgan Chase, I would say, Citibank, and top banks. So most of the people not been able to afford the risk office, but yes, a very smart, minute risk office present in every front office, very small and minute present in the front office. But the top banks like Goldman and all, they maintain a separate risk office. In front office, there are several category of the people, those who work. Like the first category of the people, those who work, they work as chairman, managing directors, vice president. Then the second category of the people who are very important to work, and I would say that their jobs are always intact even after 20 years. They are valuation expert. In our parlance, they are known as the deal makers. So they are the deal makers. They make the deal. If they are not in the picture, deal will never happen. Example, Morgan Stanley paid $13 billion to E-Trade and bought the whole E-Trade. I agree, Morgan Stanley is an investment bank itself. There is no doubt about that. But before going ahead with this deal, Morgan Stanley might have evaluated the whole deal on a holistic note. And they must have evaluated, which is known as synergy. Synergy means pros and cons, Now they must have evaluated synergy, whether if you could buy E-Trade, whether this brings synergy to Morgan Stanley or not. And unfortunately, most of the people do not know that there are 2 kinds of synergy which we have. One synergy is known as accounting synergy, that when I present the books to the general public. So example, today 99% people, when they see the Morgan Stanley investment banking results as a standalone, they see profit, cost of goods sold, SG&A, gross profit, net profit, and finally they wanted to see PAT, which is profit after tax. Because no one has time to go to the schedule to annexure, see that what all caveats Morgan Stanley did and how we can make this happen, so on and so forth. Few people do, like us, but not everybody do. But we are 1 out of 1 million. So this is accounting synergy. Second is the P&L synergy, the client synergy, which is known as cross-selling. So E-Trade is a big setup in brokerage, exchange traded fund. What is the client synergy, which is known as cross-selling? Can Morgan Stanley sell any product of E-Trade as a white label of Morgan Stanley to the clients? This they're definitely going to evaluate once they're going to decide they are ready to pay $13 billion for a company which is E-Trade, a brokerage company, to be honest. But in all these, there is a segment which is there, which is the most powerful segment, at least today, probably another few years also, which is known as M&A advisory, which is shortly known as merger and acquisition advisory. So what is merger and acquisition advisory is, it means that the advisors, in our parlance they are known as valuation expert, they go and they assess whether this deal is a right fit or not. And their assessment and their rejection is the most important thing. If they reject, then David Solomon, who is the head of Goldman Sachs, he will not even approve that. And if they accept, then David Solomon, who is head of Goldman Sachs, need very strong reasons to reject that. Very strong reasons to reject that. And in 99.99% case, David Solomon will not reject that, because he know that he will not end up being a strong reason, and God willing, if things backfire, then he's gone. Simple. So what happened in M&A advisory, you need lot of skills to be a part of M&A advisory. When you read the CFA, Certified Financial Analyst, when you read FRM, Faltu Risk Management, when you read GARP, in all such degrees, you will allocate a chapter which is known as M&A advisory. You know, there are several pages, few illustrations, you read that and people start feeling that they are the best in M&A advisory. But when you do the real-time M&A advisory, you will feel that the sea is very deep, and where you dive down, it was not a sea, it was a lake. In fact, not a lake, it was a swimming pool. So you dive down in a swimming pool, but you envisage that you're going to dive down the same way in the sea also. So M&A advisory requires a huge amount of skills. Like number one, it requires a very good communication skill. The one important trait that M&A advisors need to have, not even today, even after 20 years, is the very good communication skill. And very good communication skill doesn't mean English, doesn't mean Russian, French, German or any other language. Very good communication skill means that within 10 seconds or probably 15 seconds max, you are ready to speak on any topic. So example, if a M&A valuer being asked to speak on, I would say Donald Trump impeachment, the impact of Donald Trump impeachment on US GDP, within 10 seconds he can speak. If he asked to speak about Mr. Gates, what would if Mr. Bill Gates will sell 10% stake in Microsoft? Example. Within 10 seconds. So very good communication skill is required, and for very good communication skill, it is definitely not a one night stand. Here you need to work throughout your life. Throughout your life. Like in Treasury Consulting in our office, we are having a standard procedure that no one speak in Hindi. We will speak only in English with each other. So all the 5 team members will speak with each other only in English. We never speak in Hindi. Rarely we speak in Hindi. Because communication is an art. The more you speak, the better it would be. The less you speak, the less it would be. Communication wins even those deals which apparently looks impossible. And lack of communication, you lose those deals which apparently look possible. Communication make lot of change. Steve Jobs, I would say the best communicator. If you go to Google or YouTube, you check his the way he used to communicate when he used to do the product launches, nothing like it. I have not seen even Mr. Gates, with due respect to Mr. Bill Gates and Warren Buffett, they are even near to Steve Jobs when he was launching the product. That is the reason thousands and thousands of developers, people, coders, in fact, the politicians used to gather at California office or Cupertino office of Apple when Mr. Steve Jobs was launching the product. Because that's communication. Second skill which you need is a very high-end financial skills which covers all asset classes. FICC/C. FICC stands for fixed income, currency and commodity. So you need an exceptional skills in fixed income, currency and commodity because you do not know what kind of case is coming. Example, E-Trade. E-Trade is having an exposure in foreign exchange, everyone know. E-Trade having an exposure in currency, everyone know. They are having exposure in fixed income, exchange traded fund, everyone know. Then it means they cover the whole cycle, FICC. So an investment banker who is being valued the E-Trade, if he do not know how FICC work, then he not been able to do anything. It may possible that, like some people say that FICC, where is your strong? Like when I say about myself, I say in FICC, fixed income, currency and commodity, I am very strong more or less everywhere, right? More or less everywhere. But Tertiary Consulting invented another thing, which is FICC/CT, which is fixed income, currency, fixed income, commodities, fixed income, currency and commodities, and credit and technology. Like, I don't know, you know or not, and I know that most of the people will definitely not follow that. Nowadays in OECD, there is a big debate which is happening in the tax world, and that debate is going very hot every passing day on the social platforms like LinkedIn and all. That debate is the world is getting digital, no doubt about that. Amazon, who is an American company, is selling almost everywhere. How you would be taxing the Amazon? Uber, a ride-hailing company, they based out at US but they are doing business everywhere. How we would be taxing that, which is known as the digital tax. We're going to have separate video on the digital tax soon as we are evaluating the case, and as and when we done with the evaluation we will let you know. In that, any type of instrument come, example strike ratio. How many of you, those who are watching this video, even know that what is strike ratio and how to compute the strike ratio? Example, Life Insurance Corporation of India is going to sell around 10% stake for a minute. And currently I give you a hypothetical case that AIG, American Insurance Group, an hypothetical case that American Insurance Group is coming and saying that I am ready to buy the whole chunk of 10% which LIC wanted to sell as per the government approval, and I am ready to pay you an equivalent amount. Or let's make it a equity deal. You know, replace the LIC share with the AIG share. How would you calculate the strike ratio? Guys, if you really wanted to see how investment banking work, download the annual report of LIC, which is not in the public domain, but you can try. Or you can download the annual report of AIG, which is in the public domain, American Insurance Group, AIG. And just see, if you are an investment banker, you asked to value this company, AIG, how would you value it? And if you are able to value AIG, it means you would be a best investment banker in your life and no one can beat you. Third important thing which we need in investment banking, M&A advisory, which is known as the legal or regulatory. Example, today the world have 16 regulatory. I cannot name all, but I name few. MiFID second, Market and Financial Instrument Directive second, SFTR, Security Financing Transaction Regulator, LIBOR replacement, which is known as the fallback language, which is MAR, which is known as CAC, CAD, Basel III, DFST, Dodd-Frank stress test, which is known as CCAR, Comprehensive Capital Annual Review, which is happening almost every day, BHC compliance, bank holding company compliances. I'm not saying that an individual can know everything, but he should be jack of all, might not be the master of all. As an investment banker, people expect from you to have a jack of all, if not the master of all. That is what at least people expect from an investment banker. The last important thing which comes to an investment banker is to present the whole data in a way that it end up as a deal. which yesterday I tried explaining via a Singapore video, which is known as data crunching, which means that you have a humongous amount of data, and data is lying here and there on your emails, your pen drives and everything. You need to make it in a concrete way that you are able to present to your management. Example, if I ask you that download the annual report of Citibank, which is there in the public domain, it is 10K, no infringement, no IP infringement, and comprehend the complete annual report of Citibank in 10 slides. If you are able, and make sure that this 10 slides make a meaning, or I give you 20 slides, convert this into the 20 slides. If you are able to convert the whole into 20 slides, then you are king. So M&A advisory requires very good communication skill, it requires very good FICC skill and all. And now there is another skill which is required specifically in M&A advisory by American bankers, which is known as QFC. QFC stands for Qualified Financial Contracts. When Treasury Consulting would be bank and we would be launching our investment bank wherever in Singapore or London, then we would also comply to the QFC, because we would have a cross-border arrangement with the United States of America. Having said that, qualified financial contracts, arrangement, understanding of that, reporting of that, regulatory of that is a very important thing, and to be honest, most of the people do not know it about. They do not know it about. When it comes to M&A advisory, there are two forms of M&A advisory. One is the internal M&A advisory, one is the external M&A advisory. I noted few points for you. M&A advisory is divided into three parts. One is a simple restructuring. It divided into two parts. One is the advisory and one is the restructuring. So advisory means, example, Saudi Aramco. Saudi Aramco wanted to go ahead with, they just raised around $30 billion via their flagship company Saudi Aramco, a petrochemical giant, and around $2 trillion of valuation. But Aramco not sold it. Aramco sold a very small part of the stake. Internal restructuring, advisory. You are advising how to get this done. But what if Aramco say, Aramco is buying 20% stake in Reliance, which is the practical case. Everyone know that Reliance Industries Limited is selling the chemical and oil, about 20% of chemical to oil business to Aramco. Now here Aramco is buying a stake in RIL. With voting rights, not voting rights, I don't know, time will tell when the deal would happen. Here you need restructuring, because RIL is doing restructuring. It is not advisory, by the way. Restructuring is divided into three parts. So eventually M&A divided into two parts. M&A advisory, one is the normal advisory, one is the restructuring. Restructuring divided into three parts. Simple restructuring, complex restructuring, very large restructuring. Example, I don't know how many you know or not, when the Enron case happened and Enron CFO went to jail, and when the Enron asset being sold at that point of time to pay off the debt of the investor, those who invested in this company, it was a very large restructuring at that point of time. Similarly, like in 2008 when the Lehman crashed, Lehman Brothers and Bear Stearns, and they at that point of time investment bankers came and they valued Lehman Brothers. So these are very large restructurings, and nowadays due to the recessionary environment they happen at least once in 2 to 3 years they happen. Like after 2008 Lehman, several incidents of large restructuring we do have. Both simple, complex and large restructuring divided into three parts, which is internal and external. External could have so many ways. Internal, equity restructuring, debt restructuring and hybrid restructuring. Many people feel that debt means bonds. I will give you few instrument. Convertible bonds, constant currency convertible bonds, foreign currency convertible bonds, foreign currency redeemable convertible bonds, foreign currency non-redeemable convertible bonds, foreign currency redeemable preference convertible bonds, foreign currency redeemable non-preference convertible bonds. And if I continue to speak, the list is too long. People feel that what is debt? Nothing. Bonds, debentures, nothing. But debt is as big as we have FX. And by the way, no degree, Certified Financial Analyst, FRM, Faltu Risk Management and GARP teach you the whole world of the debt. They just give you a very glimpse, tip of an iceberg. And here is not the fault of the people, those who are teaching, rather it is a fault of the students. Those who come and ask their teachers that why we not being taught this. But anyways, that is between the student and the teacher why I should enter. Then in external restructuring, we are having issues like subsidiation, desubsidiation, which includes spin-off, hive outs, sell-off, and list is very long. I'm not here explaining what you mean by subsidiation, what is desubsidiation, which is spin-off, one is spin-out, what is hive off, demerger, what is and all these. What I'm saying that M&A advisory looks very easy from outside. To me, it looks like the most simplest things we do have, to be honest. But actually, M&A advisory is one of the most difficult jobs investment bankers need to do, and specifically when it comes to valuation. Like, I still remember when Saudi Arabia decided to go ahead with $30 billion of funding, which includes the green shoe. Many investment bankers were not in agreement of the fact that this company can value $2 trillion. And seven different top investment banks gave different ratings to different valuation to Saudi Aramco. Somebody gave 1.7, 1.8, somebody gave 1.9 and few gave 2. And one gave more than 2. It's not valuation. Valuation is subject to interpretation. So if you wanted to make your career in M&A advisory, remember that it is a holistic approach. It is not non-holistic approach. You need to understand most of the thing, and now when the technology is going strong, when artificial intelligence is come into the picture, when virtual reality and all these things coming into the picture, then the job cuts is 100% sure. So the data crunching part now is done by the artificial intelligence, a machine. And a human being need not only to understand that, but also to digest and process that. So previously what happened, an investment banker used to get the job done. And he is going to make some slides, which he is going to present to the client. Client is in agreement, not agreement, we don't know. But now the same job is done by the machine. And if an investment banker is say that I don't understand what machine computes, then he is gone, which is known as quant strategies. Sooner or later you will realize that quant strategies are turning out to be very important for investment banker, and specifically for all investment bankers, those who are United States based, just like Goldman, JP Morgan, Citi and all. This was our view of investment banking. Treasury Consulting is also entering into investment banking probably by June, another 3 to 4 months to go. We are ready. We're going to shooting a lot of videos about investment banking, and please note that Treasury consulting, like foreign exchange, we will bring the real face of investment banking on the YouTube. But I know and I never expect that the thankless people will thank us for that. Because in your lifetime, the one good thing which my God, my Lord told me or taught me is that don't expect anything. I'm getting such messages from the people wherein people are saying, I'm following your YouTube channel from the last 6 years. And they don't have even 2 minutes to give a feedback on our YouTube channel, but they want everything from us. But this is their way. We do our way. We are here to spread knowledge because we believe that if we can awake one kid in a society every day, then as a channel, as a company, we are awaking 365 kids in a year. So indirectly, we are contributing to the society. With this, we thank you very much. And you know my mobile number, which is +91 9899242978. You know our fixed income platform, www.fixedincome.global. Have a great time. At onset, we thank you very much for watching this video. The purpose of the Treasury Consulting Group YouTube channel is to spare a lot of knowledge, and that too practical knowledge in the public domain. We feel that the current education system in majority of the countries of the globe believes in degree, but we believes in knowledge. People often ask what Treasury Consulting does. Treasury Consulting is a Singapore multinational headquartered group wherein we currently have 3 legal entities, which is Singapore, India and Hong Kong. Eventually in this year we are planning a British entity and 2 OBRs, which is Overseas Bank Representative, which one in Germany, one in Greece tentatively. On knowledge front, we do offer a lot of stuff. We are having our fixed income platform, www.fixedincome.global, wherein around 62 plus live trading desks are there. And by December 2021, which is approximately 2 years from here, in a phased manner, about 100 plus, which is about 38 more will come. So in another 2 years, around 100 plus desks would be live. We do have around 200 plus training courses covering various topics which are available live on our fixed income platform. Currently we offer in 5 parts, which is functional trainings, forensic trainings, regulatory trainings, information technology trainings and technological trainings. More trainings are coming. Apart from that, we do offer MTM desk, which is mark to market of derivative, consultancy, project implementation, treasury management system, almost everything which we are coming, and more product domains are coming. On a knowledge basis, Treasury Consulting hold our Hedge Fund Academy, which is 182nd platform. We hold our Audiobook Academy, which is known as Audiobook. We are coming up with our OTT platform, which is over the top, which we titled as TRFX. And it would be completely different than we have Amazon and Netflix, due respect to both companies. Our investment bank, hedge fund, it is also coming. More importantly, we operate 44 plus WhatsApp groups, and where we cover the books, the magazines, the bank research reports, I would say the GST, the corporate finance, the educational videos, the treasury, derivative, financial markets, synthetic derivative and whatnot. All these 44 WhatsApp group are linked with the thread. So if a member of one group wanted to join another group, he can freely join that group. There is no. We do operate almost daily derivative email. You are welcome to join our group, but once again this group is subject to invitation and we will see your profile, we scrutinize your profile. So it is not for all, it is based upon the people, those who hold good profile, but If you have a fire in you and we see that you wanted to learn something different, we will definitely give you an opportunity to join. More importantly, my mobile numbers, which is +91 9899242978. My alternate number +91 9818485155. Both are in the public domain. They both are on WhatsApp. You are welcome to WhatsApp me at any point of time. Do not forget that we are the only platform when it comes to private placement, and there are so many things we are offering in private placement and many things which we are adding. Overall, Treasury Consulting is currently a Singapore multinational headquarter group, which would soon be London headquartered group, and Singapore would be Southeast Asia headquarter for Treasury Consulting. Our fixed income platform www.fixedincome.global cover a lot of information. We once again thank you very much for watching our videos, and we assure you that our both YouTube channels, which is Foreign Exchange Maverick Thinkers and which is Treasury X, and our TikTok channel would continue to grow. We are expecting around 6,000 plus videos only in 2020 and around 5,000 plus videos next year onwards on YouTube. And God willing, by 2020 December, we would be crossing hell lot of videos. Have a great time, and once again thank you very much. And our ambition of becoming or serving you or giving you a knowledge which books even do not give would continue. Have a great time.